Hello everyone, welcome back to my channel. In today's video, I will talk about how to use other people's money to invest. Oh, you're probably alarmed. What she's talking about? Use other people's money? Really? She means we should steal somebody's money, rob a bank, or borrow money from my parents and friends and dogs? No, I'm not talking about that. I'm talking about how to use other people's money legally to invest in the stock market. So if you are new to the channel, please do not forget to subscribe, give a like and comment. And then if you like me to subscribe you back, please also leave your message in my comment section. Without any further ado, let's dive right in. Do you know the ultimate goal in the stock market is to use other people's money to invest? I have two methods to show you in this video. I guarantee you the second method will blow your mind. Method number one. It is a classic method. It is the method that a Wall Street professional like Jim Cramer usually will teach you. It is a long-term buy and hold style. When you buy a security, when it doubles, you sell half of the security and hold the rest of half, let it continue to grow. In that way, you take your original investing money back. I'll give you an example for this method number one. The numbers I'm choosing to use in this example are totally for demonstration purpose. It's not true numbers. In this example, you bought 200 shares of Tesla stock at $100 per share. Total cost was $20,000. Then you waited it doubles to $200 per share. Then you sell half of it, which is only 100 shares of Tesla stock at $200 per share. So the total proceeds is $20,000. In this case, you already get your original $20,000 back. The rest of the 100 shares becomes other people's money, or we call it OPM. You let it grow continuously. When the stock price doubles again to $400 per share, then you sell half again. Your net profit becomes $400 per share times 50 shares, $20,000. That's your net profit right there. Then you let OPM another 50 shares to continue to grow. When it doubles again to $800 per share, then you sell another half. It's another $20,000 net profit to your pocket. Then you let OPM 25 shares of Tesla stock to continue to grow. Once it's reached to $1,600 per share, then you sell another half. Your net profit is another $20,000 in your pocket with all OPM. In this example, you have spent $20,000 initially, but you get it out of the stock market. Then your net profit is another $60,000. If method number one is a long-term investing, however, without any of your penny in the stock market, but will generate a very handsome profit for you in the long term, then method number two is a short-term buy and sell to create valuable cash flow first, then use the active income cash flow to create passive income for the future. Method number two is suitable for day traders or swing traders. Let's assume you only make a modest average active daily income, $300. But that $300 is other people's money because you buy and sell, all your money comes back at the end of the day. So about 20 trading days in a month, so you can generate about 6,000 OPM in a month. You say, okay, I have to have the family use of $3,000 per month. Fine. Then you use the remaining of $3,000 to purchase stocks, ETFs, and bonds at M1 Finance. And then you hold them for long-term growth and dividend earnings. So $3,000 per month times 12 months in a year, that's $36,000 a year. And then you only do it for 5 years. You plant the seed and that's it. So your total invested in $180,000 OPM in the 5 years period of time. I will use compound interest calculator to show you how much money you will have at age 65 and how much money you will have at age 95. I guarantee you it will blow your mind. In this case, you started with $0 and then you monthly put in $3,000 of OPM into your investment portfolio at M1 Finance. And then you're only going to put in 5 years. That's it. No more, no less. All right. And then your dividend growth is 3% plus price growth or portfolio growth. Total growth rate is at a 10% per year, plus minus 2%. All right. And then you compound it monthly. And then you see the end of the 5 years, you will have $232,000. So let's copy that amount and reset. That becomes your initial money. And then monthly contribution, 0. Remember, you're going to only work for 5 years and then you're not going to touch the stock market anymore. All right. So 0 and length of growth in case at that time when you finish that 5 years journey, you're already 45 years. All right. Years old. Let me just assume. All right. Anyone can adjust with your own age, actual age. So 45 years old until 65 is 20 years. So your monthly interest rate plus growth rate is still the same, 10% plus minus 2. And then you compound it monthly. At the end of 20 years, when you are age 65, at a 10% growth rate, you will have $1.7 million when you retire. Let's copy this amount to reset the formula. That's when you starting at age 65, you have that much amount of money. And then monthly contribution, you're not going to put in anything. You say, I will live like a king. All right. So you're going to take out $10,000, whopping $10,000 a month. And then you're going to say, I have good gene. I'm going to live until 95. Okay. 65 plus, 30 is 95 years old. Interest rate, you say, gonna be more conservative when I'm getting older. So about 8% plus minus 2. Dividend growth and then portfolio price growth. All right. So you also gonna be set automatically compounded the end of your journey when you're 95 years old at 8% total portfolio growth. How much money you have left? $3.7 million. Even at a 6% growth rate, when you are 95 years old, you have this amount of money. That's amazing amount of growth with all OPM. You never put in any money in your investment portfolio. And then instead, you can give your next generation $3.7 million. At the end of your life journey. Is that amazing or not? These two methods are very classic examples of how to use other people's money to invest. But many of you might say, it doesn't really apply to me. I just want to do the dividend investing. That's fine too. A lot of you just invest money to buy fraction of shares of stocks, ETFs at Robinhood or M1 Finance from time to time to create their portfolios and then to generate dividends. Those dividends yield will be reinvested into their portfolio and to generate more dividends for the future, on and on, non-stop. Actually, this is the third method to use OPM to invest because dividends are all OPM money. The growth of the stock and then doubling the stock, they are all OPM money. Think about that is the second method minus the trading part. As long as you're invested in the stock market, then your financial future will be a lot more secure than those who don't. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.